So everyone's heard about this $10,000 limit, right? Well, if you haven't, stick around and I'll explain it. And if you have, you might need some clarification. Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph, and I store 20% of my income in the form of rare coins and precious metals. Today, we're going to explain where this $10,000 limit comes from. But first, know that I am not a financial advisor. I'm not a lawyer. I'm not a CPA. Definitely do your own due diligence when it comes to IRS topics and tax information. Congratulations to AKA Bradley for getting to my comment section first on my last video. Thank you for the support. Y'all go find him down below and start a conversation. So let's clear up one of the biggest misunderstandings in precious metals. People hear about the $10,000 limit and think it applies to selling silver or selling gold, American Eagles or not, or how much you're allowed to own, and almost all of that is wrong. The confusion exists because there are two completely different IRS forms. One applies to when you're buying and the other applies to when you're selling. Before we talk about the limits, let's separate these two forms because they do not overlap. The Form 8300 applies when a business receives cash, and the Form 1099-B applies when you sell a certain precious metal to a dealer. They're different forms, they use different triggers, and they follow different rules. Once you understand the difference between these two, the $10,000 rumor becomes a lot more clear. Let's start with the 8300 because this is where the actual number $10,000 comes up. The Form 8300 is filed by a dealer or any business, not just in precious metals, when they receive more than $10,000 in cash in one transaction or related transactions. This form has nothing to do with selling metals. So when you're buying precious metals, what counts as cash? It's physical U.S. or foreign currency. And things that are specifically not counted as cash are personal checks, wire transfers, ACH payments, or credit or debit cards. Now, most LCSs or businesses, if you buy precious metals or really anything from them using a personal check, they will hold on to the items until that check clears. So be careful about that. In addition, a lot of cash-only businesses don't accept credit card or debit cards. So do a little bit of research about where you plan on buying from and what types of payments they allow. The key here is that the 8300 is triggered by how someone pays, not what they buy. So now let's talk about the 1099-B form, which does apply when you sell precious metals to a dealer or a broker. This form is not based on the dollar value and is not triggered by cash or a payment method. Instead, it's about the metal type, form, and quantity. The 1099-B form is the IRS's way of tracking brokered sales of a certain commodity transaction. According to the IRS instructions, a sale of precious metals triggers reporting only if it meets commodity contract minimums. Those minimums are specified as gold bars equal to or greater than 1 kilogram, which is 32.15 ounces. So any smaller quantity than that is not required to be reported. Second, gold coins, foreign and other specified types. 25 gold coins from Canadian gold maple leafs, South African Krugerrands, Mexican onzas, or other designated foreign gold bullions, and smaller quantities are not reported. Then there's silver bars. Any 1,000 troy ounces or more in silver bars must be reported. Remember, rounds are not bars. When it comes to 90% silver, this limit is $1,000 of face value, and that is all that is required. 1,000 ounces of silver bars $1,000 face value in 90% silver, 25 ounces in foreign bullion coins, and over 1 kilogram in gold bars. Know that the 1099-B form applies whether you're paid in cash, check, or wire. It's about the metals themselves, not the payment. So just to be completely clear, I'm going to list off some things that are not explicitly stated in the instructions for the 1099-B form. The 1099-B form does not say anything about American silver eagles, Canadian silver maples, or any other modern sovereign silver bullion coins. It does not include American gold eagles or American gold buffaloes or any generic silver or gold rounds. So let's go ahead and summarize these. The Form 8300 is when you are buying precious metals, really when you're buying anything, if that is a car or precious metals or any other asset. If you're buying it with $10,000 cash, that needs to be reported. Now, checks, wires, or any other sort of digital payment is not considered cash and can be used differently. Then we have the 1099-B form, which states requirements for filing in the case of selling foreign gold bullion, gold bars, silver bars, or junk silver. On the selling side of the 1099-B form, the lowest limit is currently $1,000 face value in 90% silver, but even that has a melt value of about $66,000, which is well above what people were considering this $10,000 limit. And then if you look at a kilogram of gold, that's near $150,000 right now. However, also consider that the Form 8300 specifies U.S. currency, and these bullion coins are U.S. currency. If you're planning on trading 10,000 American silver eagles into gold, then yes, that would be $10,000 that you are bringing to the dealer. That also applies to 200 1-ounce gold products. So even though there is no limit on the 1099-B form for selling American products, there is technically that limit when bringing U.S. currency in any form to a transaction. What I find somewhat interesting about this is that the gold to silver ratio is currently at a 50-1 or very close to it. And the American silver eagles are denominated $1 and the American gold eagles are denominated $50. So that 10,000 American silver eagles or 20 American gold eagles are both currently around $960,000. And quickly, while we are on the subject of paying the IRS their due to taxes, I'll go ahead and bring up capital gains tax as well. I've had a lot of comments referring to my gold to silver trades when it comes to capital gains taxes. And what you need to know about that is that for long-term capital gains, the lowest bracket is a 0% tax for single filers up to a $48,350 annual tax income. And for married filers, that 0% bracket is up to $96,700 in taxable income. Now, there is a 15% bracket and a 20% bracket, and those are above those numbers all the way up to a $530,000 and $600,000 limits that pushes you into the 20% bracket. So please look up the capital gains taxes if you are selling either a short-term or a long-term asset. Again, I'm not a financial advisor, lawyer, or CPA or anything like that. I'm just explaining my understanding of these laws to encourage you to do your own due diligence and look them up for yourself. And if you do find information that is different than what I just shared, please put it in the comments. Let me and everyone else here know what you find. And if you like today's video, make sure to give it a thumbs up. Go down to the comment section for any comments or questions. Share the video to anyone that you think might like this video or might learn from it. And subscribe if you haven't already. But most of all, thank you so much for watching. And just remember, every ounce adds up. So no matter how small, Just keep stacking.